Hello everyone, welcome to Amok Bulls. Today we'll discuss how to master price action trading. What is a price action? The price action is nothing but a fluctuation of a script. In this screen, you can observe in the live market, there is a movement of the candles. This is nothing but it's a fluctuation of a script, that is price action. What is price action trading? As a trader, when you observe the screen or candlesticks, so based on that, you have to make a decision of buying or selling. That is by observing the price and volume without any indicators. Two important elements in price action trading. One is identifying the support and resistance level. Another one is price acceptance or rejection at support and resistance level. How to identify support and resistance level? Drawing trend lines, pivot points, and round numbers. In these three, drawing the trend lines is easiest and fastest method to understand. So how to draw trend lines? On the chart, a trend line is a straight line created by connecting at least two price peaks which show the script trend and act as a support or resistance points. So while drawing, below are some useful references to draw the trend line. One is price peak, the slope of the trend line. The price should respect the trend line. First one, price peaks. Here you can see the trend line is drawn by joining the lower points of the candlesticks, or we can say at from this level the stock is not going down. So we are joining 1, 2, 3, 4 peaks and we are creating a support trend line. Now similarly we can observe one more stock, and here the stock from some reference line it's not moving upside, so it is resisting. So we are joining by peaks 1, 2, 3, 4 and we are creating a resistance trend line. Next one, slope of the trend line. Whenever you're drawing trend lines, you make sure whenever the trend line is less than 45, it's a healthy trend. If it is more than 45 or 45 degree, it will be not a good trend, or it's not a healthy trend. The price should respect the trend line. See here you can observe the script. At one level the price is rejecting and it's going down. So this trend line is respected by all the peaks. Here you can observe the trend line is drawn which is not respected by the price action. At this point you can see the prices crossed this level and later it went down. So the price has not respected the trend line here, and it's not a powerful, because once if it is crossed like this, the trend line will become weaker and the price can cross easily whenever it needs. The price acceptance or rejection at support resistance level. After knowing the support and resistance level, it is important to know whether the price will respect the level or not. The understanding of acceptance and rejection of a price is significant to initiate good trade. What is price acceptance? The price acceptance is nothing but once if it is crossing the trend line, it should spend some time above the trend line and it should move upward. And here, if you observe, what is the price rejection? Here, the price is crossed the trend line, but it is not spent any sufficient time. Immediately, it pulled back and moved opposite direction. This is price rejection. Now, we'll combine both trend line and price acceptance and rejection. So, first one, price acceptance and rejections. Under this one, you can observe this chart, that is support and resistance. Here, the price is moving. The candlestick is moving here and it's rejecting at this place. So you can see the result. Because it's rejected here, it went down and the result will be again it touch the support level. One more example. Here you can see the resistance and support zone. The candlestick or a price is moved above the resistance level. Once if it is accepted, then it moved further. You can see it's accepted here, then it moved further. One more example. Here we can see the price is accepted here, but we should wait for the some more time because it has to spend some time here. If it is accepted, then it will move further. Otherwise, it will come back. So here, see here the price is accepted and it's spent time some time here, then it moved upside. Now, one more example you can see the trend line is drawn and the prices cross this level. The result is it spent some time here, then it moved. So whenever you're taking a trade, you can take at this point or this region entry point and you can keep stop loss below the trend line and you can make a good profit. These are some examples. This is ABB India. You can see once if it is crossed this level, then it went down without any stop. So it crossed the trend line and spent some time and then it moved. Similarly, one more company we can see here. So once after crossing this one, it spent some time, then it moved upside. So this is accepted. The trend line, after crossing the trend line, the price is accepted. Similarly, we can check one more. Here the trend line is drawn. Once if it is drawn, that means once if it is crossed the trend line, then the price stayed sometime below the trend line, then it is accepted, then it went down. If you have any questions, please comment in comment box.